Good afternoon, everybody. I've been reading the chat. It looks like Chels and Rusty are up on QXO. Gotta tell you, I'm actually really excited about them. So I will be doing another episode on them pretty soon. Thank you, everybody, for joining the Dividend Corner. Before we get started, please take a moment and read this disclaimer. Please pause the video and read the disclaimer. I am not a financial advisor. Don't take anything I say seriously. Do your own research. Do your own due diligence. I just do a ridiculous amount of research and make these videos for entertainment and educational purposes only. Thank you very much. All right. So SCHD is one of the most requested ETFs that I get asked about. Doesn't matter if it's in the comment section here, comment section on Seeking Alpha. This is the one, private messages on X, that everybody wants to know about. And I think it's for good reason too. Now, full disclosure, I have held SCHD for a long time. It is part of a diversified, complex, income-producing portfolio is the best way that I could describe it for me. Now, keep in mind, SCHD may not be applicable to your situation, may not be good for your situation. For me, it worked as a component. So I'm going to go through the entire ETF. We're going to go through the income perspective, what people can expect, and give you my opinion after I go through the actual facts about it. So before I give you the full breakdown, I want to look at the chart real quick. SCHD is something that a lot of people really liked and then started to get lukewarm on because at one point it was really keeping pace with the S&P 500. And then when the pandemic hit, I noticed that it went a little bit less tech heavy and technology has led the market higher. Over the past 10 years, it's up 117%. The majority of that came in the first 5 years, as we can say. Over the past 5 years, it has not kept pace with the market. It is up less than 30%. So keep that in mind. Their focus is not to replicate the gains of the S&P. So please, please keep that in mind. And I cannot stress enough to do your own due diligence and just use this as just an additional piece of research. So let's go through this. Let me get this off the screen first. All right. So I made a lot of notes about this to make sure everything was up to date. And SCHD, it's a really low-cost index fund for dividends. It has an expense ratio of 0.06%, which is very low. Most index funds are at 0.03%. So it's a couple of ticks higher. In the grand scheme of things, it is very inexpensive, low-cost way to get an entire basket of income-producing assets. Currently, it has 102 holdings, so it gets you very diversified in one basket. That's why a lot of people like ETFs. The dividend yield is currently 3.73%. And this fund has one goal. It is to track the total return of the Dow Jones US Dividend 100 Index. And it focuses on companies that are financially healthy with strong, sustainable dividends with a long-term track record of increasing those dividends. This is looked at as a dividend growth fund. In addition to being a higher yielding fund, most individual equities do not have a dividend yield this high unless you start going down the REIT or MLP space. Completely separate conversation. So some of the things I'm going to hit on are the investment methodology, how SCHD is constructed, what the portfolio looks like, and then the meat and potatoes, why everybody's here, the dividend growth profile, and how that can benefit you over a long time duration We'll run an exercise over a 5-year, 10-year, 15, and even a 30-year period based on the information we have. And then I'll compare it to a different strategy that may be more applicable, maybe less applicable for your situation with a higher yielding dividend ETF. So I'm just going to scroll through the, hold on. You guys are saying I'm blurry. Some of you are saying it's okay. Some of you guys are saying I'm blurry. I mean, change quality on YouTube. Is it really that bad? I think I'm just going to buy another freaking camera at this point. Some people complain, some people don't. All right, give me 1 sec. I'm going to look at YouTube and look at how it looks real quick because it looks perfect on StreamYard. So give me a sec. I apologize. Okay, you guys are right. This looks very grainy on YouTube. All right, give me a sec. Let's say. It's not a connection issue. I can tell you that much. Let's see. No, it's not a Temu camera. It's the same camera that's been working. All right, let me check the settings. All right. I apologize, everybody. And now it looks better on YouTube. Someone's stealing my fiber. They better not be stealing my fiber network. All right, it looks like it's getting better. Yeah, some of you guys are saying it looks fine. This is what we're going to do. I'm going to go through this video and then I'm going to go get another camera. That's what we're going to do. So it will be better quality tonight. I will be taking a drive to the computer store in a little bit and fixing this problem for tonight. So let's just get on with it. And I apologize for everybody who this is not coming out perfectly. So, all right, the investment methodology. So SCHD tracks the Dow Jones US Dividend 100 Index, and this index is designed to capture high dividend yielding US stocks with a record of increasing their dividends. The way the selection process works is they have to be part of the Dow Jones US Broad Market Index. REITs are excluded. You're not going to see Realty Income, FRT, any of those companies in here. The companies must have a minimum 10-year history of paying dividends to even be considered. That's one of the main reasons why everybody likes this fund so much, because only companies with a decade of dividend growth are even considered to be part of this ETF, which pretty much ensures every year going forward, you will have a larger dividend being paid than the previous year. And it filters out newer companies that are a little bit more speculative, and we don't know if they're staying power with the dividend or not. So from a quality and sustainability aspect, it ranks the eligible stocks based on a composite of 4 fundamental metrics: dividend yield for the income, dividend growth rate, which is how fast the dividend has grown historically, return on equity, which is profitability and capital efficiency, and cash flow to debt, the ability to service obligations and support payouts. They do not want companies that are 95, 96, 97% ratio on payout. The payout ratio is the dividend payment versus EPS. So the earnings per share, if a company has $2 earning per share and the dividend is $1, they have a 50% payout ratio. That is typically very healthy because the lower the payout ratio is, the more there is to increase the dividend and even increase buybacks, pay down debt, make acquisitions in the future. So the lower that payout ratio, the better. So the index is around 100 stocks, give or take. Right now we're at 102, and it is always rebalancing. It rebalances on a quarterly basis. So the fund structure is a market cap weighted index. It's organized as a standard US equity ETF. It's listed on the New York Stock Exchange. We went over expense ratio. Dividends are paid quarterly. You can take the dividends as cash, or you can turn DRIP on. DRIP is the dividend reinvestment program, where whatever cash dividend you get, it gets plowed right back in. Your cash payment automatically buys you more shares. And that is what I currently have turned on because it increases your cash flow over time, because every quarter you're buying more shares without putting fresh capital in, which is really nice. So here's the portfolio breakdown. So we're going to go into the top 10 holdings. And I really like the way Seeking Alpha illustrates all this stuff. So let's bring that up. Technology is the fourth largest segment. Until this changes, I am not expecting SCHD to be what it once was from an appreciation standpoint. Maybe I'm wrong on that. But I'm not seeing in the top 10 holdings any real firepower. And when I say that, I mean Microsoft, which pays a dividend, Apple, which pays a dividend, Alphabet or Meta Platforms, which pay a dividend, NVIDIA, which pays a dividend, which I would never expect to be in here. There are a lot of companies in this top 10 that I like. Hopefully everybody has their coffee out, because that's very important on a nice Saturday afternoon, especially when we're talking about stocks. Stocks, dividends, coffee, great trifecta right there. In the top 10, I'm currently a shareholder of Cisco, AbbVie, Bristol Myers, Coca-Cola, and Verizon. I really like all of these companies in the top 10. I've thought about adding Chevron. I always go back and forth on it. I think it's a phenomenal company. But these are all companies with staying power. They're all companies with great big dividends. And when you look at the diversification and the way that the weighting is, nothing is out of balance. Not a single company has more than a 5% allocation. No sector has more than a 20% allocation, which protects the fund. A lot of people get worried about the S&P because it's so heavily weighted in the Mag 7. And while the idea that the Mag 7 are going to keep getting bigger, there's no guarantee of that. So this is a more balanced ETF, which theoretically should mitigate downside risk, in my opinion. So let's get to the dividend yield and the dividend growth. And I put together a spreadsheet with it. In addition to, I found a tool that does everything automatically, so I no longer have to build out complex sheets. We can change everything on the fly. But let's look at the dividend. So right now, SCHD has a dividend yield of 3.73%. It is currently paying $1.03 per share. This is the big thing right here. The 5-year annual growth rate on the dividend is 10.38%, and it has grown the dividend for 13 consecutive years. Pays on a quarterly basis. And when we look at the dividend history over the past decade, the dividend has just gotten bigger and bigger. So I'm going to share the spreadsheet that I made, and then we'll get into the tool and start toggling around and start running some scenarios. But this is very interesting. So keep in mind, I like looking at things from a historical perspective and then looking at all the dividends, which I have in here. So since inception, SCHD has generated $8.19 from its dividends. The quarterly dividend growth is 22 cents per share on an adjusted basis. Now, keep in mind, SCHD did a split. So when you look at it, this column is what it has paid out, but this column is what I care about because it is adjusted for the stock split that occurred. So quarterly dividend growth has gone up from just over 4 cents to 26 cents per share. So you got just over 22 cents. The total income generated in 2012, 27 cents. In the trailing 12 months, Q4 dividend has not been issued yet. So we have the Q4 dividend from 2024 plus the first 3 quarters of 2025, $1.03 per share. The annualized growth, 283%. That should be percent, 76 cents per share. If you had bought SCHD at inception, is $8.49 per share. Current price, $27.71. Long-term shareholders have benefited from $19.22 of appreciation, or 226%. With the $8.19 of dividend income it's generated, the yield on cost, 96.52%, because of all the dividend growth compounded throughout the years. It's been a really good investment. Total return, 322.91%. And then it's been in existence for 14.2 years roughly. So your annualized return is 22.74%. So a lot of people really like this ETF for those reasons. When I go through this, it's never missed a dividend payment, and it has legitimately increased the dividend every year. So very solid from an income perspective. So I want to show everybody why this is so powerful. Now, I just found this tool, and this tool basically does everything that I use to build down the spreadsheets. So I'm actually going to link it so everybody can play around with it. It's from MarketBeat. I will make sure that I put it in the description of the video. I'm going to put it in the chat right now. So this is the tool that I'm currently using. So let's get on with it. So let me increase the size a little bit. All right, that looks good. So, and now I'm getting text messages that the camera is blurry. I need to go get another one. Yes, I am aware the camera is blurry. Going right after this. Boom. Going to get another camera after this. I'm probably going to go buy something ridiculous so I never get into this problem again. So let's keep going. So if we change these settings, just do 1,000 shares on this, current share price, annual contribution, $0. Put a dividend tax rate in at 15%. The annual dividend yield at 3.72%. The expected annualized dividend increase at 10.38%. Expected share appreciation, I put 7% because it has not been keeping up with the market. 7% is actually more than what we have seen on an annualized basis over the past 5 years. But I think that if we do go into a bull market, SCHD can perform a little better. So that's why I decided to do 7 years and now 20 years on the years invested. And when we look at this, of course, an ad comes up. You have an ending balance of 240,000, and the initial investment would have been 1,000 multiplied by 2771. So we can do the math, $27,710. Now, average annualized return, 11.4%, but I don't really care about that. I care about the dividend income. And you would generate $102,000 over the next 20 years in dividend payments. Now, the really interesting thing is in the details. So your shares owned is the second column right here. annualized dividend per share. In year one, $1.05. But in year 20, $6.90. And keep in mind, this is without adding any additional capital from your pocket. We have the annual dividend after taxes, compounding quarterly, what the account value is after DRIP, and how many shares we own after the fact, and what the share price would go up to if it keeps increasing at 7%. And we can toggle that at 0 if we want. I just put it at 7 just to keep this somewhat realistic. But your annualized dividend income, which is the fourth column, would increase from $1,045.28 all the way to $14,653.27. So you're going to be getting a check for over $1,000 a month 20 years from now. That's pretty good when you think about allocating 27 grand now for your future self to getting a monthly paycheck. Now, if you were to add an annualized contribution of $1,000, the numbers change quite a bit. Those extra shares really add up, and now you're doing almost 20 grand in annualized dividend income. So this is a big reason why SCHD is something that everybody talks about. And if we take this annual contribution back to 0 and add a 0 on the number of shares, let's just say somebody said, you know what, I got a little bit over $250,000 to put into income and I just want to buy the basket. Based off of this, that initial investment of $270,000 theoretically would grow into $2.4 million over a 20-year period based on these stats, no additional contributions, but the share price increasing by 7% and the average dividend yield staying at these levels. The big thing is your first annualized dividend after the quarterly compounding, $10,452. That increases all the way to $146,000 and change over a 20-year period. Now, keep in mind, that's assuming that everything works out and we get the dividend growth. What if the stock didn't do anything? What if we had no growth in the stock? Ending balance is going to go down. But what happens to the dividends? I mean, your annual dividends are $392,000. And that's because you can buy way more shares. Your share count would have went from 10,452 to 65,319. Huge amount of additional shares plus the dividend growth makes it an incredible compounder. And that's why there's a debate about dividend yield versus dividend growth. And so many people are more interested in a respectable, modest yield that has a tremendous amount of dividend growth on an annualized basis. Dividend growth for a lot of people is very important. It's important to me. But as the dividend yield gets higher, the dividend growth can become a little bit less important. It depends on how you look at things. But right now, SCHD is still one of the top ETFs for dividend income. It's got one of the highest AUMs, assets under management, and it's because of these statistics. Now, if we were to look at something like QQI, which is one of my favorite covered call ETFs right now, and we did something, no increases on the dividend yield because it's a covered call ETF. I have no idea what the share appreciation is going to be. Let's just keep it at 3%. No annual contribution. And we're going to plow everything back in. Let's see what happens. Your ending balance is, I don't remember what SCHD's was. I think it was actually less on 1,000 shares. But your annual dividend, because you're generating so much out of the gate, that your annual dividend goes from 7,900 to 40,000 on a 1,000 share investment, which would be roughly, where's the stock at now? 54, so $55,000. Let's say 5,000 shares or 5,100, because that's probably around where we were with the SCHD one, around 270,000. No, I guess not. We've got 5,000 shares. No, maybe a little less, 4,500. Yeah, we'll keep it at 4,500. So on 4,500 shares to around that 270 mark, your first dividend would be, or first annualized dividend cumulative, just under $36,000. And that would grow all the way to 183,000, plowing all this capital back in. So it's a give and take. Some people like more out of the gate, plowing it back in. And this is with no growth. We know it's no growth. So it all depends what your interests are. Some people like the high yield. Some people like the large dividend increases on an annualized basis. I like both. I own both of these. They're both components of my portfolio. I think they're both good funds for specific purposes. And this is why a lot of people really like SCHD. So I'm going to look at the chat and just answer as many questions as I can. And, here's where we get into the subject of qualified versus non-qualified dividends. And qualified dividends versus non-qualified are taxed at a lower rate. And they're able to do this because they don't have certain types of stocks within the portfolio. So I would certainly talk to a tax professional, go on the IRS website to understand the difference. I'm not going to get into the benefits and non-benefits because I'm not an accountant. So I really don't want to go through that and put that out there. So if anybody has any questions about SCHD, I am happy to answer them. Let's see. A lot of people are saying they like QQQI. To me, QQQI and GPIQ are my two favorites right now in the covered call space. Let's see. Yeah, look, VOO is a great S&P 500 index fund. I love that fund. And you do have to keep in mind when you're looking at SCHD that they did do a price share split. So you have to look at the second column. If you can't get it because you're in Europe, I do not know what to say. There are similar funds from Wisdom Tree. I think it's DGRO is another one you may want to look at. I'd have to do some research on that. So, and look, Chop Shop is right. There's very minimal tech, and that may not be an interest for a lot of people. And we stated that at the beginning, that there was less technology in it these days. I do believe that Microsoft was one of the largest components back in the day. And I actually see people talking about JEPI and JEPQ. I would strongly suggest reading my recent articles on Seeking Alpha about both of those. To me, they are no longer the kings. They used to be the kings of the covered call space. They are underperforming the Goldman Sachs ETFs and Neos investment ETFs in that space. So I would seriously run the numbers. If you don't want to run the numbers, I've already run them for you. Just go on my articles. I did them all over the past month, and you'll see exactly what I'm talking about. I actually think my JEPI article came out this week. And the Goldman Sachs tickers are GPIX for the S&P 500 and GPIQ for the one that's focused on the NASDAQ 100. The Neos Investment Group ETFs are QQQI. Obviously, the QQQ stands for the NASDAQ 100, and then SPYI for the S&P 500. So let's see. Let's look more at the chat. Regarding your Seeking Alpha portfolio, are you happy with the basket breakdown percentages? Rusty, I am. I'm thinking about doing a riff at the end of this year, the bottom 10%, which I've never done before. And look, I'm sure you've been reading the article since you asked the question. And for that article series, I stick to a 5% or less individual allocation, 20% or less sector allocation. Sometimes ETFs or REITs gets a little bit above it, but I try to keep them around 20%. There's more than 100 names in that portfolio, and performance-wise, it's doing really well for me. So I really like it. What about VTI versus VXUS, QQQM, SPMO, and SCHD? I'm not familiar with VXUS or QQQM. I am familiar with the SPMO, which is the momentum one. I am familiar with VTI. For me, I prefer VOO to VTI because it's got a little bit more appreciation over the long term. That's my opinion. Some people would rather have a total market index fund. Let's see. Does VOO pay dividends? Thank you for the gifting the memberships, Rusty. I truly appreciate it. And we actually had a great members only video last night. Unfortunately, Chris Hager will no longer be able to participate in our fun Friday night conversations because he just got a job at SoFi. So we wish him the best. He's a very intelligent individual, and I have a lot of confidence that he's going to bring a tremendous amount of value to SoFi. So we're really happy to see Chris go over to SoFi. Let's see. IDVO versus QDVO. I am more familiar with QDVO, and I like it. I own it. I need to do some work on IDVO. Let's see. Yeah, I'm not I don't look, there's a lot of ETFs to know, so I'm not familiar with QQQM. I apologize. Somebody did ask something about SCHG, I believe, which is the Schwab Growth ETF, which I happen to like. It's very similar to SPYG, which is the one I'm in, which is, I like them both. Oh, June, how are you? VOO does pay a dividend, yes. Yeah, Low Explorer. I do believe Broadcom used to be in there also, but I just can't recall. I know Microsoft used to be. Chris Hager, if you're on X, his name is Data Driven Investing, DDI. He'll be winding that account down. He starts at SoFi in a week. So he made the announcement last night live on the FinTech Friday show that we do. VOO does pay a dividend, yes. Quarterly dividend, it's not a lot. It's about 1.34%, I think. I'll look at QQQM. Maybe that's a momentum one. I'm really not sure. I have no idea what the difference between that and QQQ is. I have no idea. Let's see. Yeah, look, some people like VTI over VOO. I'm not going to say one is 100% better than the other. VOO is a focus on the S&P 500, whereas VTI has small mid caps. And I'll share my screen. The reason why I like VOO more is because when I do the advanced charting and I add VOO in here, and look, I haven't run this in a while. I bet you that when I hit done, because I just started talking about it, I put it on a longer time horizon. For some reason, VTI is going to have more appreciation than VOO. Just my luck, right? But over the long haul, whenever I've looked at this, VTO has done better. So this is on a year-to-date basis now. Very similar, but VOO has appreciated a little bit more than VTI on a year-to-date, on a 1 year, a little bit more, and on a 5 year. And this is exactly why I like VOO better. 11% is nothing to sneeze at over a 5 year period. A lot of people, I know, small cap, mid cap. I'm not a small cap believer. I would rather be in the best companies in the market, which are in SPY and VOO. That's just me. I'd rather catch the entire run of Nvidia and companies like that than the small caps. That's just my preference. Not saying VTI is bad, but this is the data. And of course, it's not showing. Why is it not showing? I just realized that it's not freaking showing. Here we go. I apologize. So year to date, a little bit more appreciation for VOO. 1 year, a little bit more, but on a 5-year basis, it's an 11% difference, VOO compared to VTI. And the green one is VOO. So that's just me. I go by the data. That's why I like the S&P 500 over a total market. Just my preference. Oh, now you guys are asking about Devo. I like Devo from Amplify. I like that. I think that Devo is an opportunistic fund. I like the management team. I like what they do. I like the fact that they're tactical in the covered call writing. It's done pretty good. Pamela, thank you very much for the super chat. Yeah, the Qs are great. I mean, if we add the Qs to this, because tech has had such a good run, it's going to outpace all these. Now, keep in mind, it fell. So over a 5-year period, you got a little bit more appreciation out of the Qs than you did SPY, VOO, or VTI. But a lot of people can't stomach the downturn because on a shot to the downside, the Qs tremendously went down. I mean, we don't have the price action on this chart, but if I remember correctly, it was around a 50% drawdown or so. So we have no idea if something like that's going to happen again. We know there's going to be retracements, but even recently, the Qs had a much more violent drawdown in April, and that's always going to be the case. But in the long run, it has done better. So I like the Qs also. I'm more of an S&P 500 guy. And look at this. Real Matt money. Maddie, I apologize. You know what? Whenever I go live, I must check in with Matt and send him a message. So you know what, Matt? Every time we go live, you will have a message in your WhatsApp. And of course, I go send him a link right now, and I'm looking at that beautiful brisket that he made last night. I mean, look at this thing. Is this thing not a thing of beauty? Is this not a thing of beauty that Maddie made on his smoker last night? I mean, unbelievable. Oh, look who's here.
Steven, it's like you don't even love me anymore.
I mean, I didn't know that you want to talk about freaking boring dividends. What's going on?
I swear it's like you hate me these days.
Are you coming on tonight?
We'll see, Steven.
I mean, I sent you the link for tonight. I checked in with that one. I just assumed, and of course I was wrong because I assumed you didn't want to come on this one. I apologize.
Steven, it hurts. Oh, you guys get a little sneak peek of what I smell like.
Oh, what do you got over there?
Don't worry about that.
I don't even recognize that. What do you have over there?
Little Cologne, Steven. Little Cologne.
A what?
Little Cologne.
The hell's that?
Some eau de toilette.
I have no idea. You're speaking gibberish tonight.
Cologne, Steven. It's cologne.
Oh, I don't know these things.
Yeah, you do. I know you smell nice. I've smelled you.
No, I don't use that.
First thing I did. You can tell people I like smelled every interview when I met you in person.
Uh-huh. You know, Michelle's got jokes today. I think you're right, Michelle.
I think Steve thinks he's better than all of us. Steve,
yeah, definitely not.
These boxes behind me are stacking up like I'm moving, Steven. What's going on? I need to get these things organized.
You got rid of the punching bag, and now you got boxes there. I don't know what's going on with you.
I don't know, Steven. It's out of control. That's what it is.
You're out of control.
I need to clean up this desk. This desk is a mess. You guys don't even want to see.
I gotta tell you, I'm
Devo's
so
a good one, man.
shook. I'm so
Yeah,
shook to go to the computer store right now
why?
because I'm gonna end up coming out of there with another computer, freaking a crazy camera, another microphone. It's no good.
I need to, man, with this 24/7 stream. I can't even use my one monitor because it's always showing. So I need to get in my guest bedroom, the one that's behind me. I need to get that set up so that it's on its own. So Diva's a good one, man.
I like
Diva's
Devo.
a good one.
And
People were chatting about QQQ versus QQQM, and it's just an expense ratio thing that QQQM is slightly less, but you have to consider this is the same reason why I do SPY versus VOO, is because the liquidity for SPY is slightly better, and even though the expense ratio might be higher, you have to do the cost benefit analysis for yourself to understand is that savings that you get from investing in VOO worth the ability to have all the liquidity that you want and strike prices, etc., for your covered calls. And so that's really the difference, especially for like QQQ versus QQQM, right? The liquidity for QQQM is going to be less. A lot more of the institutions and stuff are going to be trading QQQ. So that's up to the eye of the beholder.
You're a good role model, Matt.
I try to be like you, Steven.
You are a good freaking role model.
Are you gonna come on Rocket Lab Weekly today, Steven?
Rocket Lab Weekly? You don't want me on Rocket Lab Weekly.
You're gonna be calling it Rocket Money, and next thing you know, I'm never gonna get an interview with this year.
You're gonna have nobody freaking watching you because I'm gonna call it Rocket Money as a joke. Be like, who is this jerk? Blah blah blah. You got these other guys I've never met before. They're going to think that I'm out of my mind. No, I would be doing you a disservice.
Oh, what is this?
I think coming on Cash Flow Chronicles would be a better idea.
Hot Steven Weekly is what we need to start. But Steven's hot every day. Look how fresh this guy's hair is. Steven, you're a role model. You're a good role model. Look at me. I'm not even hair combed, nothing. You're a good role model.
The beard was getting long, so I freaking shaved,
Looks like Gandalf the young. What other good stocks these people?
Here. And yes, we can talk about with Mad Money that SpaceX is valued at $800 billion. And now, do you think Rocket Money is going to get anywhere near that valuation?
I think it's too early to tell. I mean, SpaceX obviously has Starlink going, and it's at the moment they're evaluating between 600 and 800, and it's not. I don't think that they are actually selling any equity in the business. I think it's more private owners in the business looking to sell out, and so I don't think that they're trying to raise funds. I think it's this liquidity event for the insiders. But yeah, I'm very curious to see what ends up happening and at what price people end up paying. But yeah, I think it's bullish for Rocket Lab. You're seeing a lot of news, and this is probably what I'll say in about 15 minutes time when I switch over to the other stream. But I think it's very bullish for Rocket Lab because you're starting to see a lot more people get around and rally behind data centers in space and solar in space. And a lot of people don't know this, but Rocket Lab has one of the premier space solar companies in their portfolio. And so that's obviously bullish for them. And, the James Webb Telescope, very famous telescope, that so those solar panels are from the company that Rocket Lab acquired. Some of the Perseverance rover, etc., that's on Mars right now. Those solar panels came from the company that Rocket Lab acquired. So a very big solar business. And from what Sir Peter Beck said on one of our recent interviews with the Motley Fool, is I think that they are the number one space grade solar provider in the world. Obviously, you're going to have a bunch of different people talking about how they make modular solar units for aerospace and this, that, and the other, but specifically for space grade, apparently Rocket Lab is the number one. So when you talk about data centers in space, you're going to need solar, Steven. Who are you going to get that solar from? So I don't know. It's interesting. I think we have not heard the end of what the future for Rocket Lab might hold.
We're going to get the solar from Elon Musk.
We're gonna get the solar from you, Steven.
You,
You're
oh,
that because you're
according
that
to
bright.
Bezos, we're just going to put data centers on freaking rocks orbiting in space,
You heard it here first, Steven.
which
And
would be
believe it or
great.
not, I was looking at it's like the radio frequency loss that you get of transferring that energy to one spot from the other via radio frequency actually is a lot less than I was expecting. I was expecting like, oh, it's radio frequency. Of course, you're going to lose a lot of energy and things like that, but surprisingly, no. And so the 24/7 benefits of being in space, no atmosphere that dilutes the sunlight, etc., all that then transferred via either some sort of laser communication, optical laser, or radio frequency actually ends up being more beneficial than you would think. And overall, I think ends up being 5 to 6 times more beneficial on a daily basis, rather, for doing solar in space than it does for terrestrial solar. Steven, this is amateur
And I'm
hour. You're on
speaking
mute.
in gibberish to you because my mic was muted. You just spoken gibberish to me.
Steven, some might say that in order to make money, you got to think ahead.
June is right. There is 0% chance I'm going to outer space. Sorry.
So what do we buy? What dividend stocks were you buying before I completely bombarded your?
Oh, we were talking about SCHD because that's been the most requested one to review.
Is that one back on track? I know, like
No.
earlier in the year, it was taking a huge tumble.
No, I mean, from a price standpoint, it is not back on track. From a dividend perspective, it is very interesting. And it's all because of the dividend growth rate.
What's the dividend growth rate down to?
The 5-year average dividend growth rate is 10 point. Hold on.
So
10.38%.
That's not half bad, Steven. So you're still saying SCHD to zero?
I never
the
said
price
that.
Performance, or
I never said that.
That's what I heard.
I am a shareholder in Pfizer, for those of you asking.
Brush my hair real quick, Steven.
I mean, a good role model, Matt. Oh, listen. D to my tube just came out with a phenomenal name for a dual podcast with Matty Money and myself. Milkman and Rocket Man. What do you think, Matt? Should this be the name of a new show? The Milkman and the Rocket Man?
I'm just trying to look as good as you, Steve, and it's not working.
I mean,
sure.
I think that's hilarious.
Rocket Man. Rocket Man.
Matt can do a full theme song. Do you play the guitar, Matt?
I was gonna say I have a guitar back there. You can't see it on this camera angle anymore.
See it.
Yeah.
Matt can do the whole intro. We could come out with Rocket Milk. That'd be great.
And I think it's gonna be a long, long time. Steven, not giving me cookies is a crime.
Oh my God. I gotta send you something.
Steve's a milkman. Milkman.
I'm actually going to send on WhatsApp so I can share it on screen. So I got a little text today.
From who, Steven?
From Chef Paul.
What does he have to say for himself?
I mean, this is what he had to say for himself. He made a whole batch.
Are those the first test bed? What is this?
I gotta tell you, the prototype was freaking delicious. Delicious. We are now in the stage of he is going to a few different parties. He is getting real world feedback from people, and we're going to see what happens.
There you go. I like that angry butter. When do I get my first pass, Steven? I'm willing to pay new
Well,
money.
we gotta, there's a few things we gotta work out first.
You keep talking about it, and I don't have any cookies in my hand,
I
so
understand. I understand that.
I want to be the first customer.
You can be the first customer.
Where do I send my goddamn check to?
First batch is on us.
What are you, a drug dealer?
Like the crack dealers, first hit's on us.
Fucking Steven.
Oh boy. But Matt, let's see what you
Man.
think about these numbers, because this is after I went through everything about SCHD. MarketBeat has a pretty good dividend calculator. So on 1,000 shares, with where the dividend yield is, and bumping up the annual dividend increase to the 5-year average, and if we assume a 3% price appreciation per year, which isn't necessarily realistic, but we'll keep it, 15% dividend tax rate, you're going to go from 1,000 shares and your first annual dividends paid of $1,045. And keep in mind, this is without putting in any additional money, no additional contribution. So $27,000 investment, 27,071. You're going from 1,045 to 44 grand a year, 45 grand a year in dividends. Over a 20-year period.
Just with not investing any additional?
Yeah, just plowing everything back in through drip because of the huge dividend growth rate. Now, that's a 5-year average growth rate that we're looking at. So we're assuming that they would be able to hold that for the next 20 years in these assumptions. But if that's true, your annualized dividends are almost double, probably about 70% more than your initial investment.
How do you go? Are you investing additional capital every month as well?
Nope.
I'm just confused how you go from 1,000 shares to over 1,100 shares in 1 year. In year one, like if you're reinvesting.
Hold on. Annual contribution, no. Quarterly distribution frequency, drip.
I mean, it might be right. It's due to the magically in the next year you're getting 12% more shares. It just seems high to me.
It does seem high. You know what? I don't know why it says annual contribution here.
Damn it, Steven!
I have it set on 0, and I hit calculate. Good catch, man. Let's do it again. Maybe I got. Hold on. Let's reset.
You're misleading investors. This is why people get sued, Steven.
You know what, Matt? I had it on 0. Everybody saw it on 0. Now we got to redo all this. We did have it on 0, by the way.
Sorry. I've had like a phlegmy throat.
All right.
There you go. That seems more realistic.
Good catch, Matt. You are right. So it goes from 1,045 to 22,000 and a half over 20 years.
I was about to say, Steven, I was like, I'm done. Why am I investing in rocket money? You know what? Let me sell out. And
I don't know why you're investing in rocket money, but that's besides the point.
Hey man, it's made me a few dollars.
Good catch, Matt. But what do you think of this?
Well, now I don't give a shit because it doesn't look nearly as good. I mean, we were going from 1,000 shares to like 6,000 shares. Now it's only 3,000 shares. This is garbage, Steven.
Well, I blame the tool and not me using a spreadsheet because I did click to make sure everything was zeroed out on that.
Let me see. After 20 years, I wish you could have like a inflation. I always like to do this with and without inflation, assuming like 2.5 to 3%.
That would be a very good tool to have on this.
Because then you can kind of give an estimate as to like, okay, what is this NPV almost? Like, what's an NPV of investing in this today, right? Utilizing strictly inflation. And I'd also be curious, like, this is the way I like to start to look at things. It's like, I like to think about what's your annualized. So if you were to take the first number and go to the last number and then divide it pretty much by the first number and figure out what the annualized return of that be, because obviously you're getting the 10% increase per annum, right? That's phenomenal. So if you're able to keep that up at an initial 3.7% yield.
Maybe we didn't use enough shares for Matty Capital because, if I had Matt's money, I'd donate mine. So let's make it an investment that Matty would be interested in. So 270 grand starting, okay? Year one, 10,452 in dividends. And then you go all the way, you make it $250,000 a year in dividends in 20 years.
It's not enough, Steven. It's not
enough.
Yeah.
We need to do 100,000 shares for Matty to get interested?
A billion shares, Steven.
A billion shares. All right. Now you're getting a little crazy.
But all right, my man. Well, I have to run, unfortunately, or fortunately, depending on how you look at it, what lens you look at. I have to do the Rocket Lab Weekly, which is one of my favorite shows to do every week. So I will I'll talk
when
to you
you
soon.
getting the CEO on again?
We were hoping to get Sir Peter back on this quarter, but I think he just was booked out. So hopefully either the beginning of next year or after the fiscal year 4Q earnings.
All right. Well, Matty, you're a good role model. Hopefully Rocket Money goes to 1,000.
Hopefully.
And
all right, my man, much appreciated.
I'll see you tonight. You'll be on tonight, right?
Fingers crossed. After this call, I'm probably gonna run, and I haven't eaten yet today, so I'm probably gonna go grab some late lunch, early dinner, and maybe some milk and cookies for this evening.
Listen, when Matt says that, I know he's gonna be there.
I'll at least stop by. I'll promise that.
I know he's gonna be there.
I'll promise I'll stop by.
All right, we got a lot to talk about. The Fed.
You brightened my day, man. I was glad to see that you were on. So glad to have. Thank you for having me on, man. I always appreciate it and love seeing you. You're a good friend of me.
You're a good role model, Matt. I'll see you
man.
later.
Talk to you soon. Bye.
So Matt Money coming in. All right, so let's try to catch up with the chat. Which is the best chip company under $50 that has a yield? I'm not exactly sure. Getting ready for the brisket tree. Brisket's pretty good. Rocket Money. I'm sure a lot of people are in that with Matt. He's done phenomenal on it. The verdict on SCHD is, as long as the numbers stay the same, the dividend growth over a long period of time is going to do really well. So, look, yeah, the camera's clear now. I don't know, but I am going to go get a different camera. So never fear. We will do that. I'm going to blame YouTube with the camera, but we're going to go get another one. So, no, Charles, I'm going to go get it. It's for the community. It's not for me. I am happy to go get one. So I'm going to go get one. And instead of just blindly ordering one, because I blindly ordered a Logitech one that was Tanner said was going to be really good, and it ended up not being good. So now I went to this one, which is Sony, and it's here and there. So I'm just going to go and I'm going to talk to some of the techies and I'm going to see what they say. But I am happy to make the investment for the community. It is all good. So we will have a new camera for tonight. Plus, it'll get me out of the house. All I'm going to do right now is finish my Microsoft article, which I just finished when I get back. It'll be good for me to get out. Very funny, Chop Shop. Good app to buy cameras. It's called Timo. I don't use those apps for anything, so I don't know. No, I appreciate everybody saying that the camera's fine, but I don't want to go through this again. So we will be asking them what they recommend. 9:30 tonight. So Chris Patel is invited, Matt Money is invited, and I believe Matt is coming. Chris is on a trip, but he said he is going to stop by for a little bit. Tanner is a probably no for tonight, and Tevis is 100% no tonight. He is going out to watch the UFC events. I am not familiar with GOF. I apologize. It's only when you share screen, change stream tonight. Yeah, all right. I will look into that for the next stream also. Tonight is Saturday. We do a Saturday night investing show every Saturday night. This Saturday will be focused around the Fed because the Fed meeting is on December 10th, which is Wednesday, I believe. End of year rally, what our forecast is, NVIDIA, Warner Brothers, big tech, and some other things. We'll probably talk a little bit of prediction markets. Vlad was on Compound and Friends, gave a really good interview. So, a lot to talk about tonight. Oh, whoa, narrative man. I'm going to the casino tonight for Indiana, Ohio State game. I like that. What do I think about the Black Mirror episodes? I gotta tell you something. I don't even know what Black Mirror is. I've been spending so much time streaming and pumping out articles that I am not up on the freaking content. I did watch the new episode of Power Force. This episode was phenomenal. Loved it. And I'm thinking about trying to watch The Gentleman again this weekend. I think I want to watch the movie again. The movie was so good. And then watch the first season again. I'll probably resubscribe to Netflix to watch it. But The Gentleman was so freaking great. I do not play the prediction markets, but I'm thinking about putting some money in and playing them. I think I could do pretty good on it. Black Mirror seasons 1 to 3. I'll check it out. I will check it out. Yeah, tonight's actually pretty big fight. Bunch of big fights. So hold on, I'll bring it up. So I know we got a lot of UFC fans in here, so hold on. This will only be a couple of seconds. So Merab's fighting tonight. That's who everybody's going crazy about. We got 2 championships. I think Merab wins. Listen, Joshua Van's no joke. So this is at the flyweight belt is going to be really interesting. I'm annoyed Cejudo's fighting again. I don't want to see Cejudo fight again. Undercard's okay. I gotta tell you, the one I'm really waiting for is the next one. Even though I think both championship fights are going to be really good, the next one is going to be really crazy. This is going to be fireworks. Patty the Baddie versus Gaethje, and then I think Kayla's gonna smoke Nunez. My opinion, just saying. I think Kayla's gonna smoke Nunez. And I got to tell you, I didn't even realize O'Malley was fighting on this card. It's going to be a good one. Rose is fighting. I can't believe Rose is still fighting. I feel like Rose has been fighting for a decade in the UFC now. So, got a lot of good stuff. And the best part is UFC is going to be on Paramount very soon. So, we'll see. I don't know where Tanner is. I have no clue. Oh man, who's the most popular UFC fighter right now? I mean, it's got to be freaking Islam or Kazmat. It's got to be one of them. Packers tomorrow, Chels? Oh boy, don't make me look at all that. Did anybody see the freaking kicker for the Giants last week? Jesus. How do you pull up on a freaking field goal because the ball is moving? Just freaking kick it. Crazy. Actually surprised he didn't freaking tear his ACL or something doing that. I mean, I think a lot of people feel like they could have done a lot of things better than the freaking people on the Giants and the Jets. New York football sucks. I mean, Buffalo is the only good thing in New York football, and they're basically a Canadian team at this point. So I don't know. Get a mirrorless camera. Okay. Listen, I'm going to go to the store and I'm going to see what they recommend. I don't know about any of that stuff. Not my forte. The Family Man, Nicolas Cage. Man, I haven't seen that in a long time. Yeah, I agree with you. The Jets and Giants are freaking Jersey team. I don't know why they say New York. Obviously, me saying Buffalo should be a Canadian team, it's a joke. They're a New York team. It's just they're so far up there that it's just like it doesn't feel like it's part of New York, even though it is. But I agree with you. They should be the Jersey Giants and the Jersey Jets. You don't see the Devils calling themselves the New York Devils. I mean, come on. What are we doing? Oh, you know what? That's a good idea. Let's see what camera should I buy for my YouTube streams on the computer? See what it comes back with. Good idea. The only way to get Italian food, love it. A little veal parm, a little chicken parm. What do you mean conflicted? What are you conflicted about? Let's see. They're saying a mirrorless camera plus a capture card, the Sony ZV-E10 APS-C mirrorless vlog camera. What does this thing even look like? In all seriousness, I need a webcam. I don't want a big DSLR because I don't have room for it. I don't think I'm going to have room for this. Like, where the hell am I going to put this? So on my desk, the problem is I have a 49-inch monitor, and I don't want to put the camera like right here in front of me because I'm not going to be able to see part of the screen. That's the problem. I mean, I'm all for getting one of these. I just don't know where the hell I'm going to put it. All right, maybe they have a tripod or something. I'm gonna have to go see. I mean, that's it's smaller than I think. Get a pole arm. Yeah, I mean, we'll see what the options are when we get over there. Yeah, I mean, Chels, with all the things I look at, I have so many things that it's either three monitors or one huge one. I prefer the 49 curved, and the curved destroys the space on your desk because it comes out at you. But having the 49-inch curved and everything on one pane really makes my life easier. That's just me. I'm not. No, 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 no. Listen, talk to your buddies at Geek Squad and ask how to manage. We're not going to Best Buy. No, 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 no. There's a Micro Center near me, so I will be going to Micro Center where the true techies hang out. I have a 5K monitor. I love it. It's freaking amazing. So the monitor that I have is the Samsung G9 Odyssey 49-inch curved. I will tell you that it is one of the best things I've bought in so long. It's amazing. If you do a lot of work on your computer, it makes your life so easy. And I should bring it. I'll bring it up. Hold on. All right, let me bring this up. Everybody makes fun of me. I have one in my office at work, and I have one here in my home office. Everybody's like, "Why would you use that?" And I go, "Oh, you obviously have never tried it. It's freaking amazing." So, yeah, this thing is 240 hertz, 1 millisecond latency, NVIDIA G-Sync in it. I mean, if you do a lot of work, it's not for gaming. Although I do game on it sometimes, but it's not for gaming. It makes research so freaking good because you can legitimately have three tabs open perfectly on this, and you can see the whole thing. So this thing is just, I don't know if it's led to better investment performance, but I can tell you the yield on work that I'm able to do because it makes things freaking easy for me. And the big, like, you could do the same thing with 324s, but having everything on one pane and not having to move your head around so much is freaking great. Like, you can legitimately see everything in a field of view. It's really good. Oh, we got someone that says that they have one also. Nice. Very nice. Let's see. Yeah, I mean, you open a spreadsheet on this thing, it is absolutely crazy. And everybody knows I work in a lot in spreadsheets. So much space on this for spreadsheets. It's amazing. It's not, trust me, it's not I mean, it could have been the Wi-Fi, but I doubt it. I'm hardwired into one of my satellites, and my internet is pretty strong. So, oh, I'm ready to play GTA 6 without a question. Maddie and I will be streaming that. Maddie and I will be streaming that. Maybe a rocket got in the way of your satellite. That interesting. What is a dividend stock you'd love to? I mean, I added Verizon this week. That's just me. Yeah, I know Micro Center had Spider-Man TCG collector boxes for really cheap. I know. I was actually surprised. Yeah, I was surprised at the dead weight in the S&P 500, and I need to start looking into some other things. And I think we're gonna do a thought experiment live and build our own YouTube 250 or something like that. So we'll see. WU, why is that not ring a bell? WU. Oh, Western Union. Yeah, no. I just don't see the staying power of Western Union at this point with crypto. I actually don't know what type of coffee that I brew at home. I have no idea what brand it is. I couldn't even tell you. I apologize. No, I'll call it dead weight. There's stuff in there that is legitimately dead weight, in my opinion. So we're gonna come out with a YouTube 250 for our crew of people. Let's see. Yeah, the YT 250. Thoughts on Chris heading to SoFi? I love it. I mean, listen, Chris is a great guy, super smart. If you've ever had the pleasure of talking to him, he's super smart, and he lives and dies that company. So I think he's going to have a big impact. And I said to him last night, if there's one thing that I want to see is him convince them that they should do an annual shareholder meeting or an annual investors meeting instead of just the annualized meeting and the quarterlies, a real investor day every year. So hopefully he can get that done. I think it'd be really beneficial. And I want, look, everybody knows I want to see Noto do more conferences and more interviews. So we'll see. It's a great opportunity for him. Just open 150. No, why? I don't open any of that stuff. Chop shop. I don't open any of it. Everything stays sealed. What's your AUM going into 2026? I have no idea. Yeah, I saw the spammer in there. I removed them. Yeah, I'm seeing more thefts with sports card shops. It's getting pretty interesting. We'll see. I'm not surprised though. That's why I have everything in a storage unit. You know, I gotta look at Misty again. I gotta look at what the hell's going on with them. I think I've generated around 55% of my investment in distributions, something like that. So I don't know. We got to look at it and see what happens. Oh, that's an interesting one. How do you benchmark your investing performance with all your different strategies and holdings? It's not easy. I take the income stuff out of it because I'm not trying to beat the market on that. British American Tobacco over Philip Morris. Philip Morris has got Zinn, so that's a little hard. So I don't know. I'm not in VG. I'm not in Next. I'm not in them. For LNG, I like the pipelines. I like them a lot. I think it's pretty hard to fake those cards. Especially, look, I don't buy things raw. So I try to buy everything graded or I buy sealed products. So I think it's pretty hard to fake a lot of that stuff. And also, if the car is expensive enough, then it'll go to a eBay authentication and get signed off by them. I don't follow NVO. I apologize. Yeah, I mean, look, MSTR has not done well. I agree, and that's what Misty is based on. So I don't follow MSTR. I mean, Misty was a shine in the dark for me. I put a certain amount of money in, and I said I just want to get the money out from the distribution and let it free roll. So we'll see if that's even going to be possible at that point. At this point, I do not own Cheniere, but it's a freaking amazing company. Software companies. Look, I like CRM here. I like CRM a lot. Talk Amazon. I talk Amazon all the time. Amazon's going to be something tonight I talk about. So tune in tonight, but I'm bullish Amazon. I'll go over tonight why. Let's see. Bezos. Guy needs to stop hitting the weights and get back to work. Look, I like Amazon. That's really what I could say. Rambler. You think SCHD will fall as new gen of investors use Hood? I don't know. I can't tell you. I have no idea. I think there's people that will never use Hood. And I think there's a lot of people that want to use Hood. So I don't know how to handicap that. Ryan, I'm not sure because QXO has moved on no news. So I'm really not sure. I mean, look, I think it's going to go long run higher. So I'm not good on short term stuff. I have no idea if it's going to pull back. Thank you. Great call on QXO. Yeah, I'll go over some of that tonight. Nvidia's tonight. I don't know. I don't want to do that right now. Yeah, I mean, look, Chels is right. FOMOing in is never a good idea. I have no idea what it's going to do over the short term. I do think over the long term, my thesis is going to play out, but I wouldn't be surprised if it retraces by any means. I don't have a full position either. I've been scaling into it. So we'll see. Yeah, I would love Andrew to go public also. I think everybody would. Hess, you mean Hess Midstream? Is Hess got acquired by Chevron? So I'm going to assume you mean Hess Midstream since you're talking about Enterprise Private Partners and Kinder Morgan. I mean, yeah, Kinder Morgan is probably the best play on natural gas from pipeline than Energy Transfer. Is a full position you able to do one or more covered calls? When I say a full position, it means a number amount of capital I was planning on allocating or a percentage of my portfolio. I don't look at it as being able to write X amount of covered calls or not. So I'm not at a full position yet, but I'm close to it on BMNR. Chels, I'm with you. I would love nothing more than for Zuckerberg to split Meta. Would love it, love it, love it. Do a 10-for-1 split. Watch the volume explode. I would love it. I do not like Hasbro for trading card exposure. Wizards of the Coast is one of their only profitable segments. In fact, it does the lion's share of their profits. And I think Magic's going to get cannibalized by One Piece. It's already been cannibalized by Pokemon, so I'm not interested in Hasbro. Yeah, I mean, I like Netflix, but I don't think that they're going to get the deal done. So I'll be going over that tonight. I have you know what? I need to make my tinfoil hat for tonight. I got to go get a roll of tinfoil, make a tinfoil hat. Because I have a conspiracy about Netflix. I'm in SLB. I like SLB. I think they're great. Yeah, I mean, look, I make mistakes all the time. I mean, it is what it is. I don't know anybody that doesn't make mistakes with investing. Nobody's perfect. Philosophy of when to sell. I mean, look, if you go into something saying that you want to make X amount, you make that X amount. I mean, probably a good time to sell, right? I mean, what I can tell you is the rare times I exit positions is because my investment thesis on the company changed. And I no longer see the upside potential, and that's when I get out. Oh, you're trying to get me in trouble, Brian. Trying to get me in trouble. Even though Chef Paul says you're not allowed to drink a cappuccino after 10 a.m., I like cappuccino after dinner instead of espresso. That's just me. Cappuccino after dinner. What do you mean never coffee after dinner? Coffee after dinner is fine. At this point, I have no interest in getting out of NVIDIA. Now, that could change in a year or two, but as of right now, I think 2026 is going to be freaking great. That's just me. Yeah, NVIDIA may be able to hit 250 next year. I don't think that that's out of the question. I think it could be pretty good. Nap time. No, no nap time. No nap time. Oh, whoa, 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 whoa. Netflix sent out an email to customers telling us to look forward to adding new Warner Brothers content coming in future, but said there are still regulatory approval steps. Yeah, regulatory approval is expected to be 12 to 18 months. And I don't think the deal gets done. I'll go over it tonight. Listen, BDCs, those are not the BDCs I like. ARCC is the one I love. There's some other good ones, but ARCC is the gold standard in BDCs. All right. This is what we're going to do. I'm going to wrap. Thank you for joining. I'll look at CNP. I'm not familiar with it, Michael. I'll take a look at it. So thank you, everybody, for joining. I'm going to head out to the store. I'm going to go get another freaking camera. And I will be on 4 hours at 9:30 for Saturday Night Investing. Maddie will be there, hopefully. Chris should be there at some point. I will be there. I put on the video what we're going to be discussing. And I will be trying to finish my Microsoft article also once I get back from the store and get the new camera set up. So appreciate everybody being here and hanging out. I'll see everybody in a little bit. Have a great day, everybody. Enjoy dinner.